What do you think's going on here? How important is this, even though it's a second day of trading?
It's called math. I mean, it's losing money. It's losing a lot of money. I think it makes analysts and investors nervous, and so it goes down. And it's interesting because you're kind of in a bit of a swing of a market. But I think everyone's a little frightened by the amount of money these ride-sharing companies are losing. I mean, $900 million is a lot of money, even though it's a great service and people like it. This is all being, as I talked about recently, subsidized. And so the question is, where can it go to find other things? Like Uber's trying to do Uber Eats. It is international. It does own other things, but these things are all predicated on each other. And so it just seems to me there's probably just going to be one that's going to win and then be owned by one person. Like SoftBank owns a lot of all of these companies. And so that's the issue, is as they expand, they're going to take an enormous amount of money, and every additional rider doesn't cost less. Do you know what I mean? Like it was software or anything else.
Sure. I mean, we had some discussions this morning about whether or not as they go public, there is more of an effort to raise prices overall, especially in a market where there are two major players. I mean, that would help alleviate some of these losses, wouldn't it?
Yeah, it would be, but there's two players competing with each other. And so, you know, you're getting these rides, if consumers are getting these rides at the expense of the drivers, at the expense of investors, at the expense of the VCs, at the expense of the capital markets, and it's great. But the question is, are you being subsidized? And what will happen when you raise the prices? Because these are not real prices. These are not prices that you should be paying for these services. And when they go up a little bit, I know I don't use them as much when they start to get in line with other services or more expensive. I think about alternatives, including public transportation or walking or whatever I might take. And so, you know, it changes the business if they cost more, but if they cost more, it changes the business. So it's a difficult situation if you don't have alternative revenue streams.
Kara, I wonder your take on what the strategic asset really is for Lyft and Uber. Is it the drivers and that relationship? Is it the riders, kind of the end user, the people with the app and that relationship? Or is it the data? Because depending on which you think is the most important strategic asset, it seems to me you value this company differently.
Yeah, I think they're the reservation system for this, the reservation system for car sharing. And so if you're like a Google or a big car company, you might think this is valuable. This information is valuable. The thing is, you know, it's still a lot of money, even for a Google or any of the other big players in this. And so, if you're doing self-driving cars eventually, do you want to own the reservation system? And they've built these reservation systems out really well. And the question is, how can they keep enough drivers engaged? How can they pay them correctly? There's still big issues around that. How do they not, how do they keep the safety going? Everything else. And so, it seems like it should be married to something else versus just by itself, but or get bought. That I've always said that about a lot of these, but the prices are so high, $20 billion, and Uber $120 billion and losing what, $2 billion a year. I mean, I could go out on the street and sell ice cream and lose $1. I could sell 1 million ice cream cones if it was real cheap. So I don't know. It's just at the same time they're great services. So it's a real question of how they can keep going with this much capital loss, which is what's happening.
Kara, with the stock down 10% today, I'm wondering, who do you think is selling here? I mean, is it potentially early investors that we see cashing out of their stakes in this company? I mean, certainly they're the ones who have probably made a lot of money here coming into this IPO. And if so, how does that set us up for the lockup a couple months from now?
Well, troubling. You know, I don't know who's selling. You can figure it out. It's probably early investors, VCs, the people that can sell. And, you know, a lot of companies are making moves about keeping people locked up a lot longer. But you really can't force people to hold on to stock they're worried about. And so this could be early investors. It could be people who bought it and then came out of it. I don't know who's doing it. But it definitely says that these numbers, this is a stock that you have to have a lot of guts to stay in and think it's going to keep going up or get sold or cost more than $20-some billion. So I don't know. I don't know. I have no idea. So I don't know.
Kara, if the price action continues to be weak over time, do you think that's a liability for Uber specifically or IPOs at large?
I think Uber and Lyft, and I think, you know, Scott Galloway on our show this week talked about this, that this is sort of a transfer of money from investors to riders, essentially. Riders do great in this whole thing, and so I don't know, I don't know what it'll mean for the Uber IPO, but everyone's got to be watching. It's not just, it's 6 times the price, I guess, and 3 times the losses or something like that. And so that's what you have to watch out for. That said, there's some very promising things around Uber Eats and other Uber offerings that are interesting. It's just a question of who's going to pay for it until they get there, and if they can make a business out of it. Because again, every additional rider doesn't cost less. It's a fixed cost for a lot of these things. So it's very different than some other businesses like a Slack, for example, or Pinterest. But it could go in the direction of a Snapchat. You know what I mean? Like if they don't execute correctly, it's a real tightrope here for all these people.
Your point about diversification is well taken. We know the lesson from AWS and the influence on Amazon. Certainly, turning to Facebook this morning, Kara, Zuckerberg's op-ed in the Washington Post over the weekend said the internet needs some new rules. He focused on 4 areas: harmful content, election integrity, privacy, and data portability, as the social network continues to receive regulatory pressure from Washington and abroad. Okay, what was your take on what he said and what he didn't say in the piece?
Please regulate me. I mean, I don't know. He's trying to throw off the responsibility. Here, you take this giant, terrible mess that I've created. No, I don't think he can do that. I don't think he can offload freedom of speech onto the government. The government has rules around freedom of speech having to do with the government. This is a private company, and I got to say, this is his job. He's got to clean up this mess, and he can't turn to the government for that. He can get help from the government. He can, they can do a privacy bill. That's certainly interesting. And data portability is also interesting. But this is his problem. And I just, it's funny. Please regulate me, government. That's just made me laugh.
Here are some interesting jujitsu I saw in this op-ed, though, is he was saying, here's where you should regulate me and everybody else in our space. And by the way, there are things that we're already doing that we think our competitors ought to do, too. Add some cost to their balance sheet. Did you read that into it, too?
Oh, the whole thing was fast. I'm fascinated by all his missives that he does. I did a translation. I thought about doing it here, and I thought, I just can't. It was interesting because like someone from the FCC, one of the FCC commissioners or one of them responded saying, no, thank you. We are not into regulating the free speech on Facebook. So I don't think the government needs to step in here on some of this stuff. But, there's regulation coming, and so he's getting ready to talk about what they would like. So this is a signaling to someone about what they like. But, everybody's got opinions of their own, like Elizabeth Warren has some. Mark Warner has some, Amy Klobuchar has some, all kinds of regulators. And of course, the California laws privacy laws coming into place in 2020. And then there's Europe. And so there's going to be a lot of regulation here. I'm just not sure it's going to be, necessarily to Mark Zuckerberg's liking or to his wishes. And it shouldn't be. It shouldn't be.
Kara, did you just use the word miss? What about this to you as a miss?
The myth? What do you mean? I'm sorry.
Miss. I think you used the word miss, that you've been following his misses.
Misses,
what about this op-ed as a miss, specifically?
Well, he writes a lot of them, and they're fascinating because you have to sort of take them apart, like what is actually going on here within the thing. And I'd love to be in the meeting where they decided to do this. Like, what is the goal here to create this thing? Like, please take away this giant mess from me, is what it's saying to me. I think that's what it's saying, because a lot of around the hate speech is the government can't really regulate a lot of this stuff because of a thing called the First Amendment. And so it's not the government's place to regulate a private, it's like someone regulating NBC, the government, like NBC asking for the government to regulate it. And there are some regulations, but not in the way that I was reading into here. I found it confounding, frankly.
Yeah. Finally, there's this notion of an oversight board, Kara, and as we're talking, Facebook has a statement out saying that they're opening a public consultation process to help answer questions around the design of this board. They're bringing in Baker McKenzie for some support.
Yeah.
How do you think that would work?
I don't know. Who would serve on this board? Would it be you? Would it be me? Would it be again? It's it's sort of like Tom Sawyer getting everyone to paint his fence, right? I'm not painting your fence. I don't paint billionaire fences. I don't know about you, but I don't paint billionaire fences. Again, this is Facebook's job. It seems like it. And I get that they want to bring in viewpoints and they should have advisory things. But again, this is the job of Facebook to regulate its network. It's the job of Steve Burke to run NBC, I guess, or the job of Bob Iger to run Disney. And so I don't know. Do you want to be on the board to do that? Not me.
I think I'm busy that day.
Yeah,
but Morgan and John?
It does bring up an interesting problem that he's outlining here, saying what we don't want is a whole bunch of different rules, not only across every country, but across different states in the United States. So somebody please save us from this mess that really we created trying to be this big global network of people. Turns out people are messy, right?
Messy. People are messy, John. You and I know that well. So there you have it. What do you want?